Good morning, everybody. 8:15 a.m., August 2nd. Whoa. What up? What's some news after the market closed, right? Fitch downgraded the U.S.'s credit rating. It's still good, but it downgraded it, right? Because all the debt ceiling raised, all that stuff, right? Um, so took the market down, right? Well, the market went down into a demand zone, into the big bracket, big balance area that we've been in, and now it's been bought up. So we're not getting farther selling yet, right? So that's what's been going on right now. Um, Without further ado, my name is Steven Gonzalez. Welcome to my channel. We use market profile, volume profile, to determine the structure of the market. You need to have a good foundation, keeps us on the right side of the market. Also have supply and demand levels, gamma exposure levels to help us. Also, the most traded price of the rolling week and the rolling month also keeps us on the right side of the market. Okay, all about structure, market auction theory. Okay, that's how the market works. So, welcome to my channel. If you haven't already, subscribe, set an alert, would mean a lot. Always give me a thumbs up. Can wait till after you're done, but I appreciate that. As always, you can follow me on Twitter, Gonzo719. All right, we'll get right into the futures watch list. Now we were down big. We're not down as big as we were. Okay, so let's get into it. Good morning, everybody. Not sure who's with us. Maybe Rosita. Maybe it's Wien. Maybe it's somebody new. If you're new, I wouldn't mind hearing from you. Have a question or a comment, leave it there, and I'll see it. All right, so let's get into this. So the VIX. VIX is up 8.54%. That's huge. And that 15 level in the VIX is very important. That's a resistance. Okay, so if we move over there, move over that 15 and hold it, well, there's a little fear now, right? So remember I said the VIX is a month out of fear. That's a month out. So that has moved pretty significantly. Okay. Bitcoin. Bitcoin is up 1.05%, still under 30K. Silver's getting some love, up 0.74. Crude still going higher, almost at $82 a barrel. It's up 0.75. They just had a draw in yesterday's inventories. Um, Ether is up 0.43. Gold. Now it's interesting, right? With this news, the credit rating, the metals are going to go up, right? Even though the dollar is slightly up. Okay. Probably because of the yen. But let's gold up 0.34. Bonds are up 0.15, 30-year bonds. Dollars are flat. 10-year yield reports in about 2 minutes. That should be going down. Okay, do we fall under 4%? Let's see, 4% yield. The Dow is down 0.35. That is the stronger of the indexes. Okay, ES is down 0.54. Nasdaq's down 0.8. Russell's down 0.8. Okay, so the Russell's the weakest right now. Okay, let's move on. Stocks I like to day trade, right? All right. So, starting off with AMD. AMD beat earnings, talking about an AI chip. Um, they are up 2.07% pre-market. Big gamma level on AMD is 120. Okay, you have some resistance at 122. Believe it's uh, last month's highs and a couple weeks ago highs. So you have resistance there, but 120, I'm looking for that to hold. Okay. All right. So that's the only positive pre-market. All right. Rest are negative. Um, let's get into this. Let's see who the big losers are. We got Nvidia, it's down 1.6. Okay, Snow is down 1.72. Tesla down 1.9. So Tesla's been beaten down. Okay, Baba, Baba's a nice one. Okay, now Baba has went over 100, kind of chilled at 100 yesterday. Now you want to see Baba reclaim 98. So I'm interested in Baba reclaiming 98. Baba can't reclaim 98. It could pull back, maybe to 95. Okay, so that's what I'm looking at in Baba. It's down 2.2%. Okay, moving on. Top sector stocks, right? United Healthcare, my baby. Humana and CVS beat earnings this morning. Healthcare stocks, right? That is getting a little sympathy. Get into United Healthcare. Okay. Same with Johnson and Johnson. Now Johnson and Johnson just had that talc lawsuits not pulled out, so that caused a little weakness. However, with a little scare with the credit rating, these are more defensive, right? Healthcare stocks don't ever really have these cyclical ups and downs because people always, unfortunately, are not healthy or getting sick or whatever. Okay, let's go to laggards. Interesting here, right? Cat beat earnings, but now Cat is down 0.81, right? Salesforce down 0.83. Roblox down 1.7. Roblox reports next week, I believe. Yeah, next week. Okay. Now AMD did get an upgrade. It's not a shocker, but they did get an upgrade. Let's see here. Sorry for that pause. Let's go to sectors. All right, no surprise here. I mean, it's a little negative, but it's kind of flat with, but there's some stocks rising, right? So crude is up, but energy's not, which is okay. The futures don't have to move in line with the ETF. Now let's go to the biggest losers. We got XLK. Of course, that's Apple, Microsoft, Nvidia. Semis. Discretionary, Tesla, Amazon, Home Depot. Semis, you know what they are, right? Now we're getting a little more weakness, right? Currently, because we hit supply. Okay, and I'll show you guys that in a second. Okay, I'm gonna cover the news now, but the news I pretty much covered it already. Okay, but we can look at the news here. Stuff I've covered already. The Fitch cuts USA credit rating. CVS beat profit estimates. That's another one of my ads in my portfolio. I added it at like 60 something. That's been very nice. AMD plans AI chip debut by year end. Sees China opportunity. Kraft Heinz missed, so they're down. Okay, that's really all I wanted to talk about. Let's see, economic calendar. We have ADP employment change happened at 8:15. That happened already. So what were we looking at? Consensus 189. Oh, actual 324. That's a pretty big move. An ADP employment change from consensus 189 324. So tomorrow's jobless claims. Okay, and today you don't have to have anything to worry about. No risk at 10 a.m. What else here? This is Starbucks. Stock fell 1.5%. It talked about CVS. Humana 3.1. Pinterest stock fell 2.9%. Those are just some news. The Fitch rating, the last time what I've been hearing about that, okay? What I've been hearing about that is they're not one of the main firms or whatever to make that Moody's is like, I guess, the number one if you're going to get downgraded. That's the really bad one to get downgraded by. This happened, I think, in 2011, which caused a 20% correction, but that was Moody's in 2011. Okay, I mean, this is definitely not a good thing, but they still said that our market is stable. All right. Now, to what I'm seeing right now, this could just be a liquidity break, a liquidation break on this news. Get all the sellers out of there. Okay. We can get all of the sellers out of there, and then you can make the move higher. Okay. Give me 1 second. I'm going to pull this. We can get into the daily charts. Let's do that. Okay. All right. Let's look at the daily chart. All right. Of course, we got SPY. It's just been kind of like in this little range here, right? Now we know we gap down, right? So where are we at? 453.90. 453.90. We are down here. Right there, right in here. Okay. Now it'd be different if we were down here, but we're down right here. Basically, you have to, like these candles lows, okay? That's where we're at now. All right. Let's go to the weeklies. Inside last week, right? Clear to see that. Inside last month, okay? Inside last month. Let's look at the profile. Queuing up big energy, right? And I said yesterday, 452, as long as that holds, 454, as long as that holds, you're about to be bullish. Okay, let's look at the extended hours. Look what happened. 452 in the SPY. You see this? Support, 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 support. Where do we come down to? Right here. Right there. Which is also last week's lows. Came right down there. Couldn't go lower. And look what happened. Boom. Right? Right here. Let's look at this a little closer. Came right down here to last week's, almost to last week's lows. There's that support. Now we have these hourly candles. Now we came into supply. And now we're starting to see if we can make a lower high. Can we make a swing low here? Right? To propel up. 452. Also, 451. This has to hold for this market to stay bullish. As long as this holds, now all this liquidity that brought us down here is going to have to cut cover and go back. And now is this the move that makes us go higher? I don't know. Okay. Let's go to the Qs. All right, building out some volume here. You can, look at the triple distribution here. 1, 2, 3, right? No excess to the top, really. Zoom in. Okay, I said to you before, this 375 level, that's key support. 20 simple moving averages right here as well. We held the AEMA yesterday. Look at that. Boom. You tagged it, right? Now, but where are we at now? 379.70. 379.70. We're right in here. So we're a little below this candle on the tops of these candles right here. That's where we're at, okay? Now, in this move, you can do that again here, that fib. I drew it yesterday from this candle, right? Boom. So 50% is the bottom of this range, Okay, now we're right here right now. We're at 379.70, 379.70, right around here, right? So 38.2% fib also lines up with the top of these candles. Okay, that could be a launch point, right? But we need to really see about this 375 level. I believe that's where we came down to overnight, right? Because the 20 simple moving average is here. All right, so let's move on. Let's look at the weeklies. Here's the weeklies. We're inside last week, right? We're inside last month. Here's the NASDAQ. Here's 375. What did we come down to? We didn't even come down to that. You see that? See in the SPY, we did come down to that major level. In the NASDAQ, we did not. Okay? We are below the most traded price of the month. Okay, this makes sense. You see this coiling? Right here? There was going to be a move here, and that was the move down. Okay? That was the move down. So, if we zoom in here, right? So look at this. This is last week's lows. All right, we're still within last week's highs. All right, look at all that this support got broke, and then this got broke. Now we have to see, do we test down here? As long as we hold that, we're bullish, okay? Let's move on to Dow. Dow is stronger. UNH is the largest holding. UNH is up almost 6.67%. Dow will pretty much go where United Healthcare goes. Okay, let's look at the Dow. Dow's in a range, right? We're at 354.86. 354.86. It's gapping down in the middle of this range. It's really in the middle of the muck here, the Dow right now. When we go to the profile, it should be close to the most traded price. Let's look at the weeks. See, it's a little stronger. It made a new high, and we're a stronger week, right? The month, right at the top of the last month. Here's the Dow. Dow's holding these levels, right? Most traded price right here, 354. Look where it came down to in the overnight, right at this support level. Boom, came down, tested the support. Boom, took out these candles. These are hourlies, right? And you just need to hold 353. Even last week's lows right here. Okay, even if we came down here and held it, that's bullish. But we're holding the 353. Okay? So you got no excess at the top here. That's begging to just poof, push through. Okay? Let's go to the Russell. The stinking Russell. Right? Look at that candle yesterday. Boom. Look at this. Came all the way down to 8 May, rocketed up. That's a bullish candle, right? And I was like, yes. Nice recovery. Closed right at this level. Beautiful, right? And then right now, where's the Russell? 196.10. It is Russell's probably the only index within yesterday's range. Okay, it is gap because in this you look at the close, but it's in yesterday's. That's about around yesterday's lows. It's right here where buyers stepped in before. Okay, that's kind of important. The other ones were out, not inside yesterday's range, right? So the Russell, even though it's down, it's the second most weak right now to the Qs. Okay. Now here's weeklies. Okay, look at that resistance here. I'm looking to push up. I'm looking for a push up. Okay, there's last month, came up there. I'm looking because if you make that push up, we're gonna at least go to 203 to maybe 209. Okay, now here's the profile. Let's put this default here. All right. So 194 support, right? Just holding this, right? It's just holding up here. Right back at the most traded price, which is 196.47. It's right there. Okay? You can see that. It's right there. Look at this week, right? Held this, held this, held this, held this 194. Came down all the way down here, held it, right? It just needs to pop through. Remember, there's all a bunch of sellers up in here. You want to take them out to make that move go higher, right? So all still bullish in structure. Let's go to that 10-year yield, which should have slipped a little bit. Interesting. Bonds, since we've talked, have started selling a little bit, so the yield is rising a little bit. See that? Do have a triple top resistance at 408. Whoa, but right now we're at 4.05. Okay. Bond market and the markets are disconnected. Let's look at that VIX, that level I talked to you about. Now look what happened. It popped all the way up to 16 with this Fitch news. Now we're holding above 15. Very interesting here. There's that level. Popped all the way up here. So fear is rising, a big gap in the VIX. So 15 came down and held it. So can we sustain it here? If we go over 16, which is the next resistance, then we have some more volatility on our hands, folks. Okay. Now, let's look at the dollar. Let's look at that dollar. All right, just look at on a weekly. Here's the daily. Okay, dollar all the way from 99 back at 102 up to yesterday's highs. Okay, it's very interesting. That means other currencies, the yen and the euro, should be selling off most likely, which they are. Okay, but interesting that gold, right? Like I said, because this credit rating, gold's been holding up. Okay, so very interesting here. And crude is going higher with the dollar going higher. So, like I said, a couple of mixed signals here. But we're going to go into my favorite tool, market profile and volume profile. Boom. There we are. There we are. Thing of beauty. Okay, let's get into it. All right, we have our rolling weekly profile. Again, not a lot of excess here. It's still skewed to the upside. Look at the, now we have downside excess here from the Fitch move. Okay, but not a lot of excess to the top. So this still has a bullish imbalance. Okay, but we're underneath our big levels. Okay, that big level is 46.04. It's the most traded price of the month and the week. Lots of volume. Okay, most transactions, most contracts traded in futures have happened here. We are below that. That is bearish. That is bearish in nature. Okay, now you can see what happened here. Here's the lows of this bracket. Okay, happens to have the 20 simple day moving average right there and demand zone. Well, market came down here, made a low the overnight, and since then has been bought up. This is the test here. This is the time, if the sellers are going to prove themselves, they need to break this. If they can't, we're going to go back, at least test here, and possibly then go back test the other end of balance, and do we break out then? So it's time for the sellers to show up or not. Okay, you can see the gap in the futures market. Okay, next thing we're going to look at, okay, is the inventory. Let's check this out. There's the open, so that's the only long action in the overnight. This is all short. I would just say it's 100% net short, right? Now, this is overnight halfback. This is the midpoint of the move, right? We're below it. Anytime you have a big move, you want to just go to 50%. And where are we, right? We're below it, right? So sellers are keeping it down. Okay, now inventory doesn't come into play as much because we're close to the midpoint. We're pretty balanced, okay? You got a pretty balanced profile. We are gapping. It's a large gap. But we've come off the bottom. Okay, so there's not a lot of right off the bat, let's get hurt, someone get hurt. Okay, now here's the most traded price of the overnight, is right here. And here's the midpoint. So you would like to see, if you're bullish, you'd like to see the market come over 50%. Most likely these are sellers, come above them, but you have supply in here, so that's going to be hard, right? This is really the area to test. In this area, this is 2 supply zones here formed overnight. Okay, so let's look at yesterday. What do we have? Little range. You have your highs, yesterday's lows. You have price here. You have the overnight high, overnight low. We are gapping down, folks. Okay, real quick, gap rules. The most bearish, number 1, gap and go. Second most bearish, push up, failure to fill the gap. Here's the gap fill. Failure to fill it, and then we roll. Okay, that's the second most bearish. Third most bearish is we pull back all the way to the gap, and then we roll over. And then what is not bearish at all, number 4, is if price happens to get through the supply, fill the gap, hold it, and starts going back into range. Sellers are on their heels if that happens. That's how we got to gauge this gap. Okay, that's how we gauge it. All right, so based on all that, let's go with a bullish scenario. Okay, came off this bottom, came off the bottom of the bracket. 20 simple moving averages right here. Okay, so people on the daily charts are seeing this. You know, that's why sellers, if you come down here, they can't get any farther, they're going to take profit, and then some longs are going to come in. Okay, that's probably what happened. So key is here is, even if we're here and we push down and we can't even make a new low, right? Let's say we come down to this demand. It doesn't matter. This is demand zone. You could even break it, hit the 20-day super reverse, even do this. Whoop. Lower high, lower high. This is going to put the bracket rules or balance rules into play. If the market cannot go down lower, you're going to go in the opposite direction. And then everybody who's been short is going to cover. And we're going to propel us back. Now, of course, the supply is going to be hard to deal with, but most likely you go back to value, and then you traverse it, and then you knock on the door of a breakout. Okay. That's the first bullish move. The other one would be, here's the midpoint. Here's the most traded price of the overnight, right? You would want to see the market come up here, right? Work some froth off of these sellers. Kind of like hang out here, kill these supply zones, but start holding. Maybe fill the gap, and then you can get a push up to here, and then maybe see if you get some follow through. I would rather have the bulls, like the bull scenario, the first one I showed you coming down here for better. I like that better. Okay, I like that one better. Now, let's go for a bearish scenario. Now, obviously, you got the gap and go. It can go straight down here. Test the 20 simple moving average. If you break that and hold, we're going to go down here to this probably naked VPOC 4530 in this demand zone. All right. You also have the supply zones that are in here. So you can hit this supply and roll over. You can hit this supply, fill the gap, roll over. The only other way that you're going to see maybe a bear scenario is if you do traverse this range, come up into this supply, the other end of the bracket, then you get some, then it's the balance rules. You're going to fade the edges, right? And we probably end up here. Maybe we do this. Okay. That's what I'm seeing for the ES. That's not what I wanted to put up there. Alright, so that's the ES. Let's move on to the NASDAQ and wrap up here. NASDAQ is, let's see here, is the weakest index. It overtook the Russell. Okay. So, let's get into it. Let's get into our levels. Okay. Bullish imbalance in the weekly profile. Now we got some excess down here. And a lot of volume up here, okay? With not a lot of excess. If you start creeping up here again, this is begging for a move up. Doesn't mean it has to happen. It generally does is what happens though, okay? That's generally what happens. All right. Now, yesterday, I talked about single prints. Right in here. They were cleaned almost fully. Remember I talked about that. We still have more single prints down here. You don't count this overnight activity. You don't count that because it's not real-time trading hours, okay? So we still have single prints right here. They will probably be cleaned most likely today. Okay. Now, our important level is this area. We'll call it 158. Okay. Market is below this. Right here. That is bearish. Okay. You're below these big levels. But we're also in a little bit of a trading range that we kind of broke out of. Okay. There's two ranges in the NASDAQ right now. There's a little micro range that was here that we were playing in. We broke that in the overnight. But then there's a larger range that's got support around here. We didn't go near that. Okay, I showed you guys that in the Qs. Alright, so here's overnight halfback, which is the midpoint of this move. NASDAQ is below it. Here's the yesterday's low. NASDAQ is below it. We are gapping down. Inventory. Here's the only long activity compared to all that short activity. That is close to 100% net short. However, we've come off a lot from the bottom, so that fade trade, what I just talked about, inventory, is gone. That is gone. We have a balanced profile. Look, most trader price is right here. So right now, it's in balance. The overnight doesn't give a lot of edge. Okay, I already talked about the gap rules before. Gap and go. Failure to fill the gap. And then a gap fill and then roll all bearish unless you come into range and now you put the sellers on their heels. Okay. So you can see futures, Nasdaq hit the 20 simple moving average right there. Okay, in futures. So, what do you have to see here? Same scenario. Pretty easy. Okay. Overnight low in the 20-day simple moving average. Okay. It's right there. Right here. So, market can clean these single prints, right? Let's say if it does this, everybody gets scared, even if you take out the overnight low. But then we recover, come above this 20 simple moving average from higher low, higher low. We're going to go, most likely, fill that gap. And then there's supply here, but then you're most likely going to tag here, and then you possibly could do that. And do we break out? I don't know, but that's a big resistance level right there. Boy, that's big. Okay, is this the liquidity now that everybody needed in order to fuel this move higher? You have shorts all in here. Okay, that's lower highs all across the board. And as soon as you cross here, they're going to start to cover. As soon as you cross here, they're really going to cover, okay? So that's one. Second one is, here's the midpoint. Here's the most traded price of the overnight. Okay, you could push down a little bit, but if you're a little more conservative, you want to see this area fill the gap and hold inside yesterday's range. You have supply here, so that could be tough. You have monthly VWAP. Then, you could probably tag in here, and that would be the test for the market. Because this won't have as much fuel as a move down and then up, right? This will be a little more difficult. And of course, we're talking bullish, so you can come through these levels, won't be easy, and then test the other side of balance. Okay? In a bear scenario, okay, you can gap and go. Right down here, if you hold under the 20 simple moving average, you can test this bottom of the bracket out here. Then maybe go to this naked VPOC, 15450. Okay. Also, you can come in, fill the gap, roll over. Now you still have a shot here at coming into this supply, and you can't go across this big level and you get lower highs, and then we could fall apart. And the last one is if we all the way come out and test the top of this range, which if we come and knock in there again, I would say probability we break out. But if you don't, then you got your edge trade here, and we probably go here and balance out, okay? So that's what we're looking at here, okay? Hopefully everybody was with me. Who was with me understands. We got a plan. All right, I'm going to line that up with some stocks. Now I trade futures. I'll trade the index. I'll trade the stock that I feel is strong, right? So I'm still overall looking for a long. Okay, that's been the easier trade. So we just have to see what this market does. Now the market's correcting even more as I'm speaking. It's going higher, close to the midpoint. It's really a test for this market. Okay, really, really, really a test. Okay, real quick, we can go into the hourly charts just to show you what I have on my charts. And you can see what I'm seeing, okay? We'll just look at this real quick, okay? Okay, so this is the ES futures, right? And you can see it in candlestick form, like I showed you in the SPY, but this is futures. Okay, so I want to show you something. From this move, went all the way up here, right? Our last line of defense is always the 61.8 retracement. We have breached it again, but now we're above it, right? Where the supply lines up right here is the 50% retracement. Okay, so you need to get over this in order for the market to start going this way, right? So this is very important, and that's why you see the support level, the bottom of this bracket has been support again. Now, this is fine. This is supply in here, getting some selling. The key is if the market can hold and make a swing low here and start to creep back, well, it can go, then it can make the move higher. If it loses this support and breaks the 20-day simple moving average, that's why I said you can go here. Then you got key resistance right here that it can move, right? All right. Let's look at the NASDAQ. Now down here in the lower left here is relative volume right now. He's at 174% and 189%. Okay, that's almost double what we've been used to over the last 20 days right now. So volatility has picked up. I don't need these charts to tell me that, but it's nice to see it just in a chart. Okay, let's magnify this out so you guys can see what I have here. Okay, couple things on my chart here. Couple things, right? So there's a trend line that I have, and I'll zoom out the time length to show you it, right? But it basically has been honored here, and now look, it got broken a little bit, but now it recovered it, right? That's one thing. I have Fibonacci from there all the way to here. Now check this out in the NASDAQ from that move. Here's 50%, this red line right here. That's a 50%. So it's holding a 50% retracement. It's at the 38.2% retracement is right here. Okay. So this is all lining up. See how it didn't come down to this bottom support. It didn't come all the way down. It hit the 20-day simple moving average, hit this trend line. Okay. Now there's single prints. So this is the test for the market here in the NASDAQ. Okay. Big resistance. See this? Resistance, resistance, resistance. Huge at 159.04, and a gap still there. So if we happen to go there, now like I said, this is all the shorts that will cover, and could this be the breakout? Right? I don't know. This is just scenarios, right? You have to go by what you see. So here, that trend line I can show you on a 4-hour chart. The trend line. So let's where I get that trend line from. So I'm going to get rid of this one just for now. Look at this trend line. So this is you've seen it on a 4-hour timeline, but it started. Did it start there or down here? Down here. Right here. Look at that. Started here. Support. Support, 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 support. Pretty big trend line there, okay? That is a lot of touches. And then it supported again, right? You have to break this trend line and break this support for the market to be weak. That's my point, okay? All right, everybody. I think that wraps it up here. Subscribe if you haven't already. Set an alert. Help me out. As always, if you like what you saw, give me a thumbs up, a like. It helps me out as well. You can always follow me on my Twitter at Gonzo719. Okay. And that's about it. Got our plan. Okay, I really like it today. I really like the plan. Okay, can this liquidation break now strengthen the market? Okay, what I mean by that is whenever you get a fast, swift move lower, and then you get a swift move higher, It removes sellers from the market, right? So think about it. You know, we held at technical areas, right? Now we're pulling back a little bit more again. But this is all about making that swing high or swing low, I'm sorry. The swing low. Can we just make a lower high in an hourly? I'm looking at an hourly chart, right? That's why I would like to see pushes down, get more fear, and then boom, they can't go lower, and we just go all the way to the other end of bounds. That's what I'm looking for, right? So that's it. Wish everybody stays green today. Stay patient. Okay, stay patient. All right, that's the name key. And I'll see everybody most likely, or you'll hear from me tomorrow.